Looking cold open there is a building on the edge of a business park that you've driven past 3 times without stopping. It isn't pretty. It isn't trying to be. It's just there, glass front, loading dock on the left side. A guy in a high-vis vest doing nothing in particular near the side door. Trucks parked at odd angles. You pull into the lot and cut the engine. You sit there. The company is called Meridian Freight Solutions. 14 trucks. 2 bonded warehouses. Contracts with 3 corporations you've definitely heard of. 112 people on payroll. 60,000 tons of cargo a year. The owner wants $71 million. You have $43,000 in your account. Not $43 million. $43,000. You pull out a notepad, and here is the thing you aren't sure, even sitting there, whether you are being brave or being ridiculous. Probably both. That's usually how it starts. This is the story of how you acquire a business you technically cannot afford. Not through luck. Not through inheritance. Not through anything that would make a clean 2-sentence explanation at a dinner party. Through structure. Through information. Through knowing which questions to ask and having the patience and honestly, the stubbornness to wait for the real answers. Stay with me until the end. Segment 1, Phase 1. Spend the information first before you ever walk into that building. Before you make a single phone call to anyone who matters, you spend 6 weeks doing one thing. Reading. Public filings. Industry association records. Trade press. Any court documents you can surface. 3 years of cargo movement data from Port Authority reports, cross-referenced against what the company publicly claims they're moving. The numbers don't line up perfectly. They rarely do. But the shape of the gap tells you something. Revenue is down, not catastrophically, but down. 17. 18% from its peak 3 years ago. 2 of the 3 major contracts are up for renewal in less than a year. The company's Eastport warehouse has had a running dispute with the Port Authority for longer than anyone's talking about publicly. The owner, call him Richard Marsh, is 69 years old. His adult children are not in logistics. They're not coming back to run anything. You attend an industry dinner you have absolutely no formal reason to be at. You sit next to a retired driver older guy. Barely makes eye contact. Just stares at his dinner and makes conversation the way people do when they're filling silence. And he mentions, completely off the side of his mouth, that the warehouse situation has been a headache for 2 years. That some contract the company has been counting on for stability is shakier than the press releases suggest. You write it down. Not because you know exactly what to do with it yet. Because information is not the last step. It is the first step. It is always the first step. The people who skip it are the people who walk into negotiations already behind. Segment 2, the art of the first conversation. You get there 7 minutes early. You sit in a chair that is slightly too low for the coffee table in front of it, and you try to look like you've been in rooms like this 1,000 times. You haven't. But you try. Richard Marsh comes out to get you himself. That's the first thing you notice. Not a PA. Him, big handshake. Direct eye contact, the kind that holds a second longer than necessary, like it's a small test he runs on everyone. He offers you coffee. You say yes even though your stomach is already doing something unhelpful. He talks about the company. Founded it in 1997. Kept it alive through the 2008 recession when 3 of his direct competitors shut down. You don't interrupt. You let him be proud of that, because he should be it cost him something real. You can hear it in the way he slows down when he gets to that part. After a while, you ask him one question. Just one. What makes now feel like the right time? He goes quiet. Not uncomfortable quiet, more like the silence of someone who has been waiting for someone to actually ask. He talks about his health, vaguely, the way people do when they don't want to name what they're carrying. He talks about his sons. He talks about 35 years of fighting for things that should have been simpler than they were. And then, almost as an aside, like it isn't the entire point of the meeting, he says the real number. Not the listed price. The number underneath it. The one that would let him actually close the door and walk away without looking back. The real number is $52 million. 19 million below the ask. He's already done the math in his own head. He just needed someone to sit still long enough for him to say it out loud. You write it down. You tell him you'll come back in 10 days. He nods like that's a completely reasonable thing to say. You drive home and sit in your kitchen for an hour with the lights off. Segment 3. The deal architecture okay. $52 million. $43,000 in the bank. Let's talk about the gap. The gap is the thing that stops most people. And it should give you pause. It gives you pause too, for longer than you'd like. But here's the principle that changes how you look at it. This is the foundational logic of a leveraged buyout. Not a magic trick, just math that only holds if you execute the steps in sequence and don't let panic collapse the structure in the middle. The first call you make is to a supply chain consultant, someone you've worked adjacent to for a few years. Sharp, a little cynical, exactly the kind of person who will tell you the thing is stupid if it's stupid. He is quiet for a moment, then says something to the effect of, "This is either smart or catastrophically naive." You say, "Can you help me figure out which?" He laughs. You offer him 3% equity. He says yes. Over the next 8 days, you build a financial model together. Not the version you're hoping for. What it shows is this. With existing contracts in place, Meridian generates enough annual free cash flow to service a significant loan. The business can, in effect, borrow against itself. You just have to build the legal and financial structure around that fact. Segment 4, walking into the bank. You don't go to the biggest bank. You go to the one where you have a modest, not particularly impressive relationship, because you need a lender who will actually read the package, not one who will route it to a junior analyst who has never seen a logistics P&L. You are not asking them to believe in a vision. You are presenting an existing, profitable, operational business with contracted revenue, a motivated seller, and a model that shows the debt can be serviced from the cash the business already generates. You now have $37 million of a $52 million deal covered. You still need $15 million in equity. You have $43,000. That's where most people stop. You understand it. The voice is still there, the one that says you are one phone call away from publicly embarrassing yourself in front of people whose opinion you actually care about. You don't make that voice go away. You make the calls anyway. Segment 5, the 2 phone calls that close the gap. The first person you call is someone you've known for years. Retired engineer. Late 60s. Has mentioned, more than once, that his money is sitting in instruments that aren't doing much. Money market funds, CDs. The kind of thing that preserves capital without growing it. You send him the model, the term sheet, the letter of intent. You sit across from him at his kitchen table, and you let him ask slow, methodical questions, the kind that take their time, that circle back on themselves, that aren't finished until they're finished. You don't rush him. You answer everything directly, including the things you don't have clean answers to. You offer him 12% equity. He says he's in. The second call is to a private investor, someone you've crossed paths with through professional networks. Spoken to maybe 4. He reviews the same materials and says something that stays with you. That framing is exactly right. And it's worth internalizing. Because it's the thing that makes the equity raise work. You are not selling people on a dream. You are showing them a structure that a sophisticated financial institution has already stress tested. The risk is real, you don't pretend otherwise, but it is organized risk. Risk with edges, not a fog. Together, the two of them commit $16 million. On paper. Still very much on paper. Segment 6, Day 10. Exactly when you said. You go back on Day 10. Exactly when you said you would. This matters more than it probably should. You don't entirely understand why. Maybe because everything else about this process has felt uncertain and slippery. And keeping one small, specific promise feels like the only variable you actually control. You are not late. You are not a day early. Day 10. You offer $50.5 million. Below what he asked for. You both know that. But the structure is the thing. He is quiet for a long time after you finish, longer than is comfortable. You don't fill the silence. You've learned in 6 weeks of research and 3 meetings that Richard Marsh does not respond well to people who fill his silences. So you sit with it. And then he says, "All right." Not enthusiastically, not with relief you can see. Just all right. Flat and final. The way people sound when they've made a decision they've been circling for months and have finally, quietly, landed. You sit in the car. Your hands are unsteady doing up the seatbelt. You don't start the engine for a few minutes. You own Meridian Freight Solutions. You're genuinely not sure what you're thinking. Segment 7, the version that doesn't make the story. Here's what happens when word gets out. People construct the version of events that is easiest to live with. You got lucky. You knew someone. There was money somewhere that nobody knew about. Family. A windfall. Something. They need it to be that. Because the alternative that this was mostly preparation, research, and a willingness to sit with uncertainty for a long time doesn't actually require anything they don't have. And that's an uncomfortable thing to look at directly. What they don't see is the 6 weeks before any of it. The hours cross-referencing cargo data no one asked you to look at. The consultant who told you it might be stupid. The procurement manager who hesitated for a long moment before she said yes. They don't see the 2 weeks between submitting the bank package and receiving the term sheet, 2 weeks of nothing to do But wait, and try not to run the downside scenarios on loop. They don't see the retired engineer at his kitchen table asking slow questions while you try to look more certain than you feel. They don't see Richard Marsh going quiet before he says all right. Nobody sees any of that. That's the work. And the work does not make a good post, a good headline, or a clean story. But it's the only part that is real. Segment 8, what this actually teaches you. Let me be direct about what this story is and what it is not. It is not a blueprint that works identically in every situation. Deals have different structures. Markets move. Sellers change their minds. Lenders have their own cycles. Any specific numbers here belong to a specific. The gap between $43,000 and $52 million is real. It is enormous. But the gap is not filled by money. It is filled by structure. And structure is not a talent. It is a skill. It is learnable. It is a series of questions asked in the right order, answered honestly, and followed through on with enough patience to wait for the real answers. You don't buy a business you cannot afford. You build the conditions that make the purchase possible. And then at the end of that process, which is slower and less cinematic than anyone will tell you, you buy it. That's the whole thing. That's the only part that matters. Segment 9 closing. If something in this video shifted how you think about the gap between where you are and what you're looking at, that's the whole point. That gap is structural, not personal. And structural problems have structural solutions. If this was useful, one thing I'd ask, share it with someone who is standing in a parking lot right now, looking at something they think they can't afford to want. They might need to hear this before they drive away. Subscribe if you want more of this. I'll see you in the next one.